Will we or won't we have a recession? Is a soft landing possible? It looks like the experts keep changing their mind. Let me catch you up to date about what they are saying, what I think. We will look at some earnings, and most importantly, we will talk about the week ahead. But before we do that, folks, I want to give you, yes, you right there, a personal shout out. Thank you for watching the channel. Like, subscribe, comment. We are on our way to 50,000 subs. We are less than 1,000 away. Yes, I think we were even less than 900 away. Please help the channel grow. Let's get to 50,000 so we can start planning our event in Vegas. Folks, let's jump to the week ahead. Let's look at the economic numbers and the earnings that may move the market. On Monday, we will get consumer credit. Does consumer credit continue to expand and set higher and higher levels? Consumer credit to me is one of those ones that I look at because, again, remember something we looked at last week. I don't remember the exact percentage, the total percentage. I think it was 11, might have been 11.8%. Only 11% of consumer debt in the US is variable or adjustable. 89 or 88% of the debt is fixed. So when I look at consumer credit, I want to continue to poke at that. How much is adjustable and how much is fixed? On Tuesday, we will get two Fed speeches, and boy, we are got some hawks coming out. They're talking about multiple rate hikes, folks. Yes, you got to buckle up. There are multiple Fed presidents talking about multiple rate hikes. We will talk about that more on Sunday's daily financial news. Wednesday, we get, there's actually nothing to report. Thursday, CPI. CPI is a big deal. Consumer Price Index. This is the second of two things that could move the market in a big way. I believe there's a chance, in a very, very good chance, that we break trend. What is trend? I think we've had 11 or 12, maybe even 13 down months. I believe that might reverse. In fact, I'm going to say it right here, right now. I think it does reverse. From memory, we were at 3%. I think there's a very good chance we go to 3.1, 3.2, possibly even 3.3 on headline. That said, headline could go up, but core could fall because we are 1 month away from seeing meaningful shelter inflation fall. Some of that may show up this report. I think it starts to show up meaningfully next month. We will also get the weekly unemployment claims. Again, folks, that's the one report we get every Thursday that we have to watch. That is the earliest indicator, in my opinion, that the job market is cracking or breaking. We have seen a cycle high thus far of about 264,000. I think last week was 229,000 or 227. So again, we don't get concerned until it's over 300,000 and really, frankly, 325,000. And then Friday, we will close it out with PPI, Producer Price Index. What is going on with that? Again, think about that as the wholesale prices. And finally, consumer sentiment. On the earnings front, it's going to be another busy week. We got Palantir, Tyson Foods on Monday, UPS, Lyft, and SeaWorld on Tuesday, Disney and Wynn Resorts on Wednesday, US Foods, Six Flags, and Ralph Lauren. Why are these numbers in here? Some of these are high-flying tech companies that are very momentum-based. Some of them are consumer. A lot of them are consumer-based, foods-based, and some of them are experiences. I think looking at this collection will tell us a lot about tech, a lot about consumers, and a lot about services. So what about this recession call? We have had many experts kind of retreat on that. JP Morgan, no recession in 2023. In fact, they now expect Q3 GDP to be a whopping 2.5%. Jefferies, we still expect a recession, but it's delayed. It won't be till 2024. So again, lots going on. As you know, I made an incorrect call that I thought the recession would start in Q2. Clearly did not. I am not yet here talking about when I think the recession will start. I'm still looking at the numbers. I will say this, we will have a recession. The question is when. Recessions are a natural part of the business cycle. And I think what we may be going through is a quote unquote successful soft landing where we grow below trend, but don't go negative. And it's because of what we've talked about on this channel. It's the rolling recession. It's the white collar recession. It's the bottom 50% of wage earners getting meaningful raises. It is people with fixed rate debt versus variable rate debt. It is people moving to new locations with their incomes and living quite well. I think there is a very good reason that the structural makeup of many cities and locations in the country are not captured in reports by the Census Bureau and other locations. Pretty interesting. How about a house that had a motivated seller? A couple of things going on. Remember what I've talked about, as I think there is going to be some opportunity in the luxury market. Folks, there was a New York penthouse in the Woolworth building asking $110 million. It just closed for $30 million. Folks, that is an over 70% drop. When you got to sell, you got to sell. So again, remember, there is opportunity out there. If you write shoot, 30 million on 110, that's a heck of a disrespectful offer. But those are the things that can happen. Where were the jobs? I looked at a jobs report again that came out on Friday. We talked about that in the August 4th daily financial news. Where are the jobs? Healthcare, 87,000. Construction, 19,000. Financial, 19,000. It looks like IT lost 12,000. We've got some calls on home prices. Realtor.com thinks prices are going down, down, down. Not much, but they're going down. Negative 0.6 over the next 6 months. Got a report that said home prices hit records in 60% of the largest metros. Yes, folks, it looks like the average equity per homeowner sits at roughly $200,000. Wow, $200,000 equity. If you own a couple houses, you're doing pretty good. There's only 344,000 homes underwater. 344,000 homes underwater. Pretty wild. And there's 16 trillion. Yes, folks, 16 trillion in tappable equity. What is tappable equity, you ask? Folks, that is the value that is below the 20% threshold. So if you have a home that's worth 200,000, you can get a loan up to 160,000. That extra 40 is not tappable. Below the 160, they call tappable equity. And there is $16 trillion in tappable equity. Is buying a home today a good idea or not? Well, I got to tell you, I think doing the work is a great idea. I think we are heading into a slower market with higher rates. I think the winter season is always slower. I think this season is going to be particularly slow. I called earlier and will continue to call that I think the August existing home sales reported in September will be below 4 million. What does that mean to you? It means do the work. It means get the course how to get started one rental at a time. Get your buy box. Get disciplined. Look at it every day. Understand what the average yield is in your buy box, and then go write great offers. And then lastly, when you buy the course, make sure you join the Facebook group. The private Facebook group is called One Rental at a Time Works. You need to ask to join. I then will personally go validate your purchase and then let you in. I get dozens of requests a day. Most of them get declined because they want to join without paying the price. This group is fun. It's thousands of members doing the work, encouraging and asking questions. Folks, you need to get ready. Are you interested in real estate investing? Or are you obsessed? I'm here to help you if you're obsessed. How to get started one rental at a time is ridiculously cheap at $3.99. I will give you $100 in bonuses, 2 free courses. I'll get you in the Facebook group for free. I don't know what else to do for you. Buy the course today, $3.99. Let's get started. Thanks, everyone. Bye.